It's a write-off for them.
How is it a write-off?
They just write it off.
Write it off what?
Jerry, all these big companies, they write off everything.
You don't even know what a write-off is.
What's a write-off? It's a business expense, and I wouldn't recommend buying things just because you can write them off. If it's a reasonable business expense used in an attempt to make money, you can likely write it off. For example, business-related interest and bank charges, supplies, tools, office equipment, employee salaries, or subcontractors, really most things used in your business to make money. A few years ago, I had a client expense a gram scale from a drug paraphernalia store. So I call him up and I'm like, what are you doing, man? Well, it happened to be a legitimate business expense for a spray foam company. Probably wouldn't fly if you're a hairdresser or plumber. So what can't you expense? Well, medical expenses, you can get a personal tax credit for them, but unless you have a house spending account that meets a whole list of criteria, then you can't expense anything medical related in your corporation. Clothes typically can't be expensed. Golf, your business can pay for it, but it's not deductible for tax purposes. Don't expense your groceries, pets, security dog, or gym membership. What happens if you run personal expenses through your corporation as a business expense? Double taxation. Ultimately, it's up to you to convince the CRA that the expense has a business purpose, and they'll want to see receipts as backup. Bank statements alone won't suffice. And if you're like most business owners, you probably don't have half those receipts. My biggest piece of advice is to use technology. I use Xero and HubDoc in my firm to help clients audit-proof their business, but there's a lot of options out there and I'm happy to offer some free advice.